Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me for this segment, we have Chuck Fuller, portfolio manager at Nasdaq Dorsey Wright, to discuss movement in asset class and sector rankings, with U.S. equities making another strong move for the month of June. And we'll also talk about breadth improving in the market. Chuck, it's great to see you as always. Welcome back to TradeTalks and another solid month for U.S. equities.
Yeah, it really was. We were up a little over 3% for the month. If you look at year-to-date returns now, you're looking at the S&P up a little over 18%, and we're just a little over halfway done with the year, which is pretty incredible. Even more incredible is the Nasdaq 100. Is up almost 43% over that time. So it's definitely getting harder to say that this is still a bear market rally. That's for sure. It's starting to look more and more like a new bull market. Again, we've seen U.S. retain the number 2 spot in our asset class rankings, but they're getting closer to moving up to number 1 against international. And I'd say if we have another kind of month of returns out of the U.S. that we've had the last month or two, it likely will do that over the course of this next month. But like you said, breadth indicators have really been improving. That's one of the things that we had kind of been looking forward to happen, to give us a little bit more credence that this market was going to have legs. One of the things that we've seen, especially the last, I would say, couple of weeks, the number of stocks that have been advancing every day on the NYSE has been very positive. I mean, multiple days where the number has been the vast majority of stocks have been advancing. And when we look back in time at that, the kind of action that we've seen has meant very good things for the market going forward. In fact, the way we defined it, I won't get into the specifics, it'd take too long, but it averaged about 26% returns for the S&P over the next year. And it's very rare. It's probably only the 10th time we've seen this kind of breadth improvement over a fairly short period of time like this, going back to 1950. So we're starting to feel pretty good about this market. I mean, obviously it's already had great returns, but I think a lot of people are thinking that, hey, just because it's had great returns, we're due for a pullback or a massive pullback. We're going to give it all back. And history suggests that that's not the case.
Yeah, well, I guess we'll figure some of that out over the next couple of weeks as we're going through the thick of earnings season. Of course, valuations and multiples are certainly top of everyone's minds from a fundamental perspective. Anything you've seen in terms of sectors and style or cap rankings, any major moves there?
Yeah, so I mean, technology and industrials, they remain at our top 2 spots. We did see industrials, even though they stayed at the same rank, they've seen a market improvement in the kind of score that derives that rank. Interestingly, we also saw energy move up quite a bit. It has been, around the bottom of the rankings for most of the year. It had a great year last year, not a great year this year so far. But oil is up about 10% in the last month. And so we saw, energy move from number 10 to number 7 in the rankings. On the flip side, we saw utilities kind of fall from number 8 to number 10, and financials from number 7 to number 9 to kind of make up for that. And then in the style cap rankings, we haven't seen much change over the last month. Large growth, large blender at 3 and 4. We still have mid cap blend and value at number 1, number 2. Mid cap thing is a little bit of a holdover from last year when they performed better over the most of the last year. And then here recently, they've been coming back along with the rest of the market, right? As I mentioned, breadth has been improving. So that means it's not just large cap stocks going up. We're seeing improvement in mid caps and small caps to kind of round out the picture.
And let's talk about fixed income for a moment here. Dead last in the sector rank, in the asset class ranking.
Yeah, we've literally never seen that happen before. And probably, our ranks go back to, the late 90s. So we've never seen this quite happen before. Last year, obviously, was awful for the fixed income market. This year has been an improvement for sure. But we still, we've seen a lot of back and forth action. Yields kind of come down and then they spike again, and that causes all kinds of issues, as you'd imagine, in the fixed income space. After this most recent yield spike, we have seen it fall a bit. To the 10-year was up at 4%. It's fallen back down to around 375. And that came after that inflation report we had a few days ago. But we need to see a break to about 3.55% on the 10-year probably to start feeling more constructive about the decline. And that's really because it would put the yield back into a negative trend on its chart. But still, we're seeing areas of fixed income do well, even though the broad market, it's up and maybe not a ton. Things like high yield, which are obviously more equity sensitive, have been performing really well, given that the equity markets have been doing well. And similarly, preferreds and convertibles have been doing really well as well. So that's been interesting to see.
And finally, let's wrap up with commodities.
Yeah, so commodities, I think last time I was on, they hadn't done much, the previous month. There's definitely more action this month. We've seen agriculture kind of move to number 1 in the rankings, and this is out of 4 different big areas of commodities. Precious metals have been number 1. They've fallen to number 2. And really, when you look at the top performing commodities of the year, most of them are in the agriculture space. Some of them are a little small, might be hard to invest in, but they're still posting some really good returns. Things like feeder cattle and orange juice, both of those are up over 30% year to date. Things like sugar and cocoa are up over 20%. So that's really what's driving, agriculture's move into the top of our rankings. And like I said, with oil up 10% over the last month, we saw a big move in energy off the bottom here too. Not just in our sector rankings, but in the commodities themselves. It's moved up to number 3, and we've seen industrial metals fall to number 4.
All right, Chuck, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.